Hey everyone, it's Endrit Sella, and welcome to Capital Markets Quickie, where we dive into the latest moves in the stock market. Let's jump into what went down yesterday. So, the markets were all over the place yesterday, coming off Tuesday's steep sell-off. The Standard & Poor's 500 dropped just over 0.1%, while the Nasdaq slipped a bit more, down 0.3%. On the other hand, the Dow Jones Industrial Average managed to eke out a slight gain, up 0.1%. Now let's talk about what's driving these moves. Nvidia, the AI superstar, continued to weigh on sentiment. The stock fell over 1.5% after news broke that U.S. regulators are stepping up an antitrust investigation. This came after a massive $279 billion loss in market value on Tuesday, a sign that the AI-driven rally might be cooling off, at least for now. But there was a bit of good news in the mix. We saw some signs that the labor market is finally cooling, and that gave bond yields a little breather. Job openings fell to 7.67 million in July, the lowest since January 2021. This fueled hope among investors that the Federal Reserve could cut interest rates even deeper by the end of the year. In fact, the odds of a 50 basis point rate cut by the September meeting jumped to nearly 50%, up from 38% the day before. That's according to the CME FedWatch tool. In the bond market, the 2-year Treasury yield dropped almost 12 basis points, settling at its lowest level this year, around 3.76%. So, what's the vibe right now? Well, with September historically being a tough month for the markets, and August still fresh in everyone's minds, traders are bracing for more volatility. We've got the August jobs report coming out Friday, which could bring even more action to the markets depending on how the numbers shake out. That's a wrap for today's Capital Markets Quickie. I'm your host, Endrit Sella. Thanks for tuning in, and I'll catch you tomorrow morning for more market insights. Stay sharp out there.